In the early 1930s, America was in the midst of the Great Depression, the worst economic crisis in its history. Banks were failing left and right, and millions of people were losing their savings and their homes. In response, the U.S. government enacted a series of reforms aimed at stabilizing the financial system and protecting consumers. One of the most important of these was the Glass-Steagall Act, named after its sponsors, Senator Carter Glass and Representative Henry Steagall. In this video, we'll take a closer look at the history and impact of this landmark legislation. The Glass-Steagall Act, officially known as the Banking Act of 1933, had several key objectives. First, it sought to prevent bank failures by separating commercial banking activities, such as taking deposits and making loans, from investment banking activities, such as underwriting securities and engaging in speculative trading. Second, it aimed to protect depositors by creating the Federal Deposit Insurance Corporation, FDIC, which insured deposits up to a certain amount. Finally, it sought to curb the power of large banks and promote competition by prohibiting banks from owning stock in non-banking corporations. The Glass-Steagall Act was a sweeping piece of legislation that included several important provisions. The most significant was Section 16, which prohibited commercial banks from underwriting or dealing in securities, and from affiliating with investment banks or broker-dealers. This meant that banks could no longer engage in risky activities like trading stocks and bonds for their own account, and had to focus on more conservative activities like lending and taking deposits. Other provisions of the Act included the creation of the FDIC, which insured deposits up to $5,000 per depositor, and restrictions on the amount of interest that banks could pay on deposits. For decades, Glass-Steagall served as a cornerstone of banking regulation in the United States. However, in the 1990s, banks began to argue that the act was outdated and hindered their ability to compete in a global marketplace. In 1999, President Bill Clinton signed into law the Gramm-Leach-Bliley Act, which repealed key provisions of Glass-Steagall and allowed commercial banks to engage in investment banking activities. Supporters of the repeal argued that it would lead to greater efficiency and innovation in the banking industry, while critics warned that it would increase the risk of another financial crisis. The impact of Glass-Steagall on the banking industry and the economy as a whole has been the subject of much debate. Supporters of the act argue that it helped to prevent bank failures and promote stability in the financial system, while critics contend that it stifled innovation and competition. Following its repeal in 1999, banks began to engage in riskier and more complex activities, such as the creation of mortgage-backed securities and other financial derivatives. Some analysts argue that these activities contributed to the 2008 financial crisis, as banks took on too much risk and failed to properly manage their exposure. In the wake of the financial crisis, there have been renewed calls to reinstate Glass-Steagall or something like it. Some policymakers argue that the Act's separation of commercial and investment banking would help to reduce risk and prevent future crises. However, others contend that the banking industry has changed too much since the 1930s, and that a new regulatory framework is needed to address the challenges of a globalized financial system. The Glass-Steagall Act was one of the most important pieces of banking regulation in American history, and its impact can still be felt today. While its repeal has been criticized by some as contributing to the 2008 financial crisis, others argue that the act was outdated and hindered competition in the banking industry. Regardless of one's position on the issue, it is clear that banking regulation will continue to be a hotly debated topic in the years to come. That's it for today. If you enjoyed this video, make sure you hit that like button and subscribe, and click that bell so you never miss a single video from us.